Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hello, welcome back to the Investing Podcast. My name is Ben Nye, and I am joined today by, some people call him the world's most unbiased analyst. Other people say that he grew up in an igloo in the North Pole. All we know is that he's called Krebs, and he is going to be talking about Nike with me today. We're previewing the quarter, which will be reported after the close of the market tomorrow. And so by the time you watch this, I mean, odds are that it may be delayed and we may be proven wrong. But we're going on the record right now to tell you what we think and what the risks are going into the quarter. Are they to the downside, to the upside? So if we're just backtracking about 6 months ago, there was a huge concern that Under Armour and Adidas were taking Nike's lunch. And that kind of morphed into this idea that, wait, all of this athleisure space is becoming under pressure. And is this a secular, and the question that people wanted to know was, is this a secular trend that has peaked and is now on the decline? So what are your thoughts now that we have another quarter of knowledge behind us? Has athleisure peaked? Has it been a cycle that will not be repeating? Just over in the overall macro space.
I don't think it peaked, but I think the growth rates aren't sustainable, especially with that many competitors in that space. Especially with the revival of Adidas, I think. Yeah. Like, the discrepancy between Nike, Under Armour, and Adidas, like apparel, to me isn't that great. And for Nike to meet those estimates of, I don't know what they expect for revenue is, like 7% growth.
It's up 5% this quarter.
I think that's pretty difficult in a space where you have so much competition and like revitalized competition where there's not much difference between them anymore.
Right. And so street estimates are looking up for up 5% this quarter and then up 8% following quarter. So you're talking about an acceleration. Mm-hmm. And
I think that's difficult.
Yeah, in this market, it does seem like that's tough, especially when we're seeing the inventory pressures and weak sales at competitors like Under Armour. And we know that Under Armour is not concerned about profitability. They just need to move merchandise.
Right, and they just keep spending on trying to get like sponsors, advertisers, right. Sponsors, that type of thing. Like, I mean, with colleges, Steph Curry, like they're just blowing so much money, just killing their margins, killing profitability, just to try and grow that top line.
And it's interesting you bring up Steph Curry. I mean, do you think that the trajectory of the Golden State Warriors over the last couple of weeks has any bearing on how Under Armour sales do, especially in the footwear arena, which tend to have higher margins than the apparel?
I don't really think so. I think that's just kind of short-term movements on that, and I'd wait till the playoffs anyways. You know, that's where the
big fan of playoffs.
Yeah,
playoffs over March Madness. Huh?
Yeah. Well, yeah. In this case, yeah.
In this case, it's interesting that we're talking about inventory with Under Armour, especially because you brought up a good point the other day when we were just talking about Nike, and you mentioned that so many bankruptcies in the sports retailer world. Last year we had Sports Authority. And I think that's underlying some of the optimism.
I think Gander Mountain too recently. I think they
right.
Yeah.
So I think that's underlying some of the optimism. Like they might have easier year-over-year comps, but these bankruptcies are not going away, as you point out. Do you think that's just a source of hope that's not going to be borne out in reality in terms of easier year-over-year comparisons, or do you think that's actually something that you can say, well, there is a legitimate case to be made that revenue will be increasing throughout the year?
I think that's like the silver lining of the bullish thesis, is that you're kind of just on you're coming off of a depressed level of all those bankruptcies.
Right.
I buy that argument to the extent that it outperforms going forward. I'm not sure, but I definitely think that's a tailwind going forward on the comps like you mentioned.
Right.
I don't know if you agree. Or if you think that's
I think it's a bit of a tailwind. My concern though now is just how overbuilt Under Armour was, because that their guidance that they provided when they reported was just really, really bad. And I don't think you get through that without some reverberations in the space. So that's my concern. Also, if you look at the Google Trends data, we're not going to put the data here on the video just due to time constraints, but we will have it on the Seeking Alpha article. So if you're watching us on YouTube, go check out the Seeking Alpha article. And we look at the Google Trends data of Nike alone, and then we also look at Nike versus Under Armour versus Adidas. And what's interesting is that there's all this talk about Under Armour just coming in to take Nike's lunch. But really, Adidas has been the one that's been showing out and come into play. Their trend has been, I mean, clearly up, whereas Nike has really stabilized to maybe even somewhat gone down. And so even if you say that the space is still growing, if Nike's getting a smaller and smaller piece of the share, there's a potential that Nike does not grow as much, even though the overall space is growing because they're getting a smaller market share. We also talked last time about futures orders and how that's becoming less of an indicator for Nike revenue going forward, and part of that's due to consumers shopping on the Nike website. Let's say put yourself in the place of a consumer. If you want to buy sports apparel online, where would you go? Do you go to Amazon? Do you go to a department store's website, or do you go to the actual brand?
I'd probably go to a department store website. I feel kind of sketchy buying that type of stuff on Amazon. I don't know why.
Yeah.
It's probably not realistic, but I never shop for that type of stuff on Amazon.
I agree. I don't know why that is the case, but it seems like you can. With Amazon, it almost seems like you can sometimes get funneled to vendors who you don't trust as much.
Right. Yeah.
It's kind of you have these respected vendors which kind of build that cachet for Amazon, but then you also have these guys who are really eBay sellers.
Otherwise, I like the department store sites. It's an easy way to compare stuff.
Yeah.
And then, I mean, if I want like a Nike pullover or something, I go to Nike. But I feel like on the store websites, you always pay up for that.
Right.
Buying straight from them.
What about if you were to buy a pair of shoes, for instance? Because that's the high margin.
I'm not much of a shoe guy. You guys are more shoe guys than I am.
I think we would need Andrew on here for that.
I mean, I don't know. Zappos is always a huge selection on Zappos.
Yeah. So, but regardless, I mean, you're not going necessarily to Nike's website. So that would be an argument against their argument that everyone's buying on Nike.com.
I feel like I'm probably in the minority in that one, though. Maybe
yeah, but I think it's something to be said that, people who are very brand sensitive are going to Nike. So if they switch brand taste, then they might be going to UnderArmour.com or Adidas.com, whereas where the Nike actually has to compete on product and on price, people are still going to retailers that have multiple different competitors there.
Let's get to the good stuff, though. What are you expecting tomorrow?
What am I expecting? I think that the risks are to the downside. So
it's had a nice run.
It's had a really nice run.
You were the bull on it at like 52, and I really wasn't.
Yeah. So what I was seeing last time was that there's a 0.93 correlation between the revenue in a quarter for Nike and the Google Trends data for Nike. And what I saw in December was that the November data was like really picking up, and the share price was falling. It was going in the opposite direction. So I thought that was an opportunity. And what happened since then is that it kind of moved in the opposite direction. You had the Google Trends data start to decline, and you had the Nike share price increase, so that they crossed. And to me, I think a lot of that quote-unquote easy money has already been made. So I was actually trimming some of the stock. I'm still long Nike, full disclosure, but I did cut the position back somewhat significantly today.
And you have all day tomorrow to exit fully if you want.
All day tomorrow. What about you? What are your thoughts?
I think I'm in the same boat as you, is more risk to the downside.
Yeah.
I think you just kind of see the entire retail sector like falling pretty hard over the holiday sales. I don't think holiday sales were that strong for the most part. And I mean, I don't think Under Armour, if you're using Under Armour as an example, that wasn't that strong either.
Yeah, and also,
but I mean, someone could also say, well, Nike's taking share, but I don't know.
But also, like, Nike is also so international. So Under Armour is obviously competing with Nike a lot in the United States.
Mm-hmm.
And if Under Armour is weak, then you could say, well, Nike might be weak too. But then internationally, could Nike pick it up? That's difficult to say they will, because you're seeing so much US dollar strength. So, I mean, you would see a translation effect there too. So, I don't know. It's difficult to be bullish on heading into the quarter. I would say the risks, and I think you would say the risks are to the downside too.
Yeah, I agree.
So, catch us back tomorrow. We'll probably be live tweeting the call, so follow us at Tusk Media LLC on Twitter. We might do a quick Periscope video, and then we'll do a full recap the following day. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.